Visa has been delivering financial education in various forms for over 3 decades.
The GSMA is the global trade association of the mobile ecosystem. We partnered with Visa, and we have a shared cause, which is to empower everyone to benefit from DFS safely, securely, and successfully.
This is Financial Inclusion Unlocked, an SIJ production.
I'm Jack Farron, your host, and this is the podcast meeting leading innovators and experts across the globe to discuss how we can unlock the potential of financial inclusion as a vehicle for the 17 SDGs. This is a show produced by SIJ Media, and our first series is sponsored by SCBF. The adoption of digital financial services, or DFS, has created significant impact for underserved communities across the world. The United Nations states that inclusive digital financial services have allowed individuals to store and increase savings, cope with unexpected economic shocks, access social benefits more cheaply, and make investments in economic opportunities that can lead them out of poverty. However, whilst the adoption of DFS has the potential for transformative impact, digital financial literacy is a critical topic that needs to be addressed to ensure that individuals can use these platforms and tools safely. In this episode, I meet with Panos Lukos of the GSMA and Janelle Harris of Visa to discuss this topic in more detail and learn how the organisations are collaborating on a new initiative in Kenya and Senegal. Panos Lukos is the Director for Financial Inclusion at the GSMA Mobile Money and Agri-Tech Programmes. He leads GSMA's partnership with Visa that has the objective to develop mobile-enabled financial education and drive scale among the unbanked and underserved in low and middle-income countries. Panos also leads Agri-Tech's Insights function and is responsible for developing and delivering the programme's learning agenda. I travelled to London to learn more about his work. Panos, welcome to the show. It's great to have you here.
Many thanks for having me, Jack. It's a privilege to be here today.
Fantastic. So before we look at the topic of digital financial literacy, I'd like to understand first and foremost about the organisation that you're with, the GSMA. So what exactly is the GSMA and its membership base?
The GSMA is the global trade association of the mobile ecosystem. It represents the interests of mobile operators worldwide. It unites a vast network of about 750 mobile operators and 350 companies from the wider ecosystem. And it plays a crucial role in driving the digital ecosystem forwards. It advocates for the mobile industry. It promotes collaboration, innovation among its members. The audience probably knows the GSMA better from its events, Mobile World Congress Barcelona, Mobile World Congress Kigali, or the M360 series of events. And these events provide a platform for showcasing the latest advancements of mobile technology and facilitating those partnerships between those organizations. And one of the key activities also of the GSMA is about setting the industry standards, is about advocacy, and also the interoperability and seamless connectivity between different networks and devices. So the GSMA does a lot of things.
Fantastic. And I know that you work within the GSMA Foundation side. So how does that differ?
So the GSMA champions initiatives aimed at expanding mobile connectivity to underserved regions in Africa, in South Asia, in other parts of the world as well. And we do that to promote digital inclusion and to bridge the digital divide. And through the foundation arm, which is called Mobile for Development, the GSMA leverages mobile technology to address critical socioeconomic challenges that we're facing. And for example, financial inclusion is one of them. Climate change is another. And we can do that because we are uniquely positioned at the intersection of the digital ecosystem and the development sector. So essentially, Mobile for Development facilitates those innovative solutions and partnerships and ensures that mobile connectivity reaches the underserved and marginalized communities. And through these efforts, we seek to empower individuals, we seek to improve livelihoods, and also promote economic growth and contribute to the United Nations Sustainable Development Goals. The mobile sector, the mobile industry, back in 2016 was the first sector to take a bold stance on sustainable development by committing to the 17 SDGs. So that was massively important at the time, and it's still important today.
Fantastic. And I guess digital financial literacy within this intersection is a key pillar, right? So for mobile for development, why is that such a critical issue that you're working on?
Of course, that's a great question. So I am part of the mobile money program of the mobile for development arm of the organization, the foundation arm. And that's one of the, about 10 programs of mobile for development. And the program aims to accelerate the mobile money ecosystem for the underserved. And our primary focus is on reaching the most vulnerable individuals and enabling them to build better and more resilient financial lives and communities. And we focus on improving the quality and the availability of mobile money services. And we also facilitate partnerships and interoperability and address regulatory barriers. Now, to understand the significance of the program, today we have 1.75 billion registered mobile money accounts globally. And that is based on the State of the Industry report on mobile money that we released last year. So these 1.75 billion accounts are processing about $2.7 million per minute. So that's a huge amount, truly remarkable numbers. And there's been a lot of growth over the last 10 years. And the significance of mobile money is well known and undeniable in low and middle income countries, in Africa and beyond. And DFS, in that ecosystem, digital financial services, show great potential to help advance financial inclusion in those countries. However, a key barrier to doing that is poor digital and financial literacy. And if you look at the 2021 Findex survey, 1/3 of mobile money account holders in sub-Saharan Africa said they cannot use their mobile money account without help from a family member or a friend or an agent. And that is very, very significant. So according to the State of the Industry reports, the last one, there were 835 million mobile money accounts in sub-Saharan Africa. So 1/3 of that is 278 million. So 278 million mobile money account holders just in sub-Saharan Africa cannot use their account without help. That is a huge number. And that is just for the sub-Saharan African region. If you look elsewhere, the numbers are striking. So DFS providers in those markets recognize the issue. However, they struggle to provide actionable information, financial education to their users, to allow them to engage in the formal financial sector through DFS. So by improving digital financial literacy, marginalized and low-income individuals can access DFS, can become self-sufficient, can engage in the formal financial sector with a greater potential of achieving financial stability. So that's why we're kind of engaging on this topic, and it's very, very important to us. And maybe just to kind of let you know a bit about the challenge we're facing in front of us. I have some numbers in front of me. So Standard & Poor's conducts a financial literacy survey across 140 countries. So you would be surprised by the survey findings. In Kenya, which is one of the most financially literate markets in sub-Saharan Africa, the level of financial literacy is only 38%. And in Nigeria, which is a country of 225 million people, only 26% of the population are financially literate. So these stats are indicative of the size of the problem we're facing. It's a huge issue, and the Organization for Economic Cooperation and Development, OECD, reports that financial literacy is a core life skill for participating in modern society. So we can't really stay out of this. We need to take a stance, and we need to be bold, and we need to take steps to support our project partners, and that's why we're very active in this space.
So Panos, this is clearly a very pressing issue, and the Findex stat that you've just shared with me is quite worrying, really. So as the GSMA, how are you trying to tackle this?
GSMA mobile money program has made it its mission to improve the digital and financial literacy of mobile money users. And we do that by partnering with organizations, our members, mobile money providers, and other organizations from the wider ecosystem. And together, we look at initiatives and ways to advance financial education of users. We offer technical assistance to them. We partner with them in initiatives run by the members, and we also support the development of financial literacy content. And to do that, we partnered with Visa. And Visa is an organization that has similar priorities, and it is a great partner for the GSMA. And we have a shared cause, which is to empower everyone to benefit from DFS safely, securely, and successfully.
I spoke to Janelle Harris, Head of Financial Education at Visa, to find out more about their collaboration with the GSMA. Janelle, thanks so much for joining me on the show. So to kick things off, how is Visa committed to improve the financial literacy amongst communities and also increase access to digital financial services?
I'm really excited to talk about this topic. I've spent my career in the social sector, and Visa's commitment to financial inclusion was for sure one of the things that drew me to the company. So Visa has been delivering financial education in various forms for over 3 decades. And our commitment to financial education is really rooted in a commitment to financial inclusion more broadly. And when we say that, what our social impact team is referring to is how do we ensure that communities that maybe lack access to traditional financial services, may be unbanked, or may actually lack consistent access to the internet, how do we ensure that they still have access to financial education and are positioned to eventually reap the benefits of participation in the digital economy? And so our team delivers a portfolio of financial education resources that are available globally, translated into a myriad of languages, and are currently piloting a new product that is offering modular course content to really provide some deeper learning into core concepts in financial education for individuals.
So I know that you teamed up with GSMA in 2024 to start a new initiative focused on digital financial literacy. So how did this partnership come to life?
So the roots of the partnership predate me a little bit, but my understanding is that there was a serendipitous connection between one of our social impact leaders at Visa in the CEMEA region, and some leaders with GSMA. And the roots of that were really about the equal commitment to financial inclusion, but thinking about the opportunity to leverage the mobile ecosystem to catalyze greater participation in the digital economy, but also scale access to financial education. And so we came together to think about how we could co-create something unique and think about how to benefit communities in our target markets, so Kenya and Senegal, with something that would be accessible in the platforms mobile providers offer so that end users don't have to switch between different applications in a technological environment that they're already participating in. So those were the origins of this, and it's been in the making for some time. And as you mentioned, we formally announced the partnership last year and have since been collaborating on these pilots with our new financial education content.
Yes, so I guess like leveraging the expertise of both GSMA and Visa for these pilot projects. You mentioned Kenya and Senegal as 2 initial countries. So what do these pilots look like in practice? What is the strategy and the plan for launching these projects?
So we've been working directly with GSMA and 2 mobile providers in Kenya and Senegal to figure out, first of all, on the technological side, how do we integrate the content that we have into their platforms and make it accessible to users. But we're also working on what we're essentially calling go-to-market plans in terms of how are we going to incentivize people to want to take the time to engage in the content.
In terms of target reach for this partnership and content, do you have any targets?
So in our Kenya pilot right now, we are targeting small businesses, 10 to 18-year-olds, consumers, individual consumers that are aspiring to advance professionally. They're kind of in grind mode, as we're saying, and they're like eager to learn more about how to be strategic and intentional about their income and wealth building. So those are the main categories that we're looking at right now.
Okay, fantastic. And when you look at the kind of DFL content delivery, what are the kind of success and impact indicators that you'll be looking to measure as this project rolls out?
We're both looking to measure, but also learn from user engagement. And so we can see on the back end of our learning management system how people are engaging with the content, the courses that they're looking into, but also completing, and what types of courses are actually attractive, what content is attractive. But we're also hoping to get end user feedback to better understand how things are resonating, what's working, what's not working, what's confusing, what could be better explained. And so that way we can continue to improve the content itself. We're also trying to better understand what does it look like to localize the content, and to what degree do we need to do that to make the financial education content accessible. And ultimately, we want to be able to tie the engagement with the content to other outcomes in terms of how this may affect their overall behavior financially. That piece we're still fleshing out, but I think ultimately, our team is always thinking about how does financial education influence other important outcomes, and not just financial education for financial education's sake, recognizing that financial education is like one piece of the puzzle when you're thinking about overarching financial wellness. And so that's one part that we're still exploring, is how can we demonstrate that linkage through these pilots.
Yeah, well, it sounds like a really interesting few years ahead for this partnership between GSMA and Visa. Before we hear more from Panos at GSMA, a quick mention for our series sponsor, SCBF. In Benin, a country of a population of 13 million in West Africa, SCBF supported FESACAM, a leading MFI, to scale up a digital savings collection program that was launched in 2019, alongside a financial education initiative to empower clients with knowledge about DFS. The education program used client forums, group discussions, credit disbursement sessions, and community radios, along with digital tools like WhatsApp, SMS, and animated videos in local languages for wider reach. By the end of the project, client satisfaction with financial education rose from just 43% to 74%, reaching 16,924 new rural clients. Youth engagement also increased, with higher credit requests and 8% average savings growth. FESACAM and SCBF's efforts combine digital innovation with education to foster financial resilience and economic growth in Benin. Now let's hear more from Panos.
Panos, we've just heard about the partnership between Visa and GSMA. So when we look specifically at the content for digital financial literacy, GSMA has members all over the world in different continents. So how do you ensure that the content that you co-create and develop with your partners is fit for the local context?
The GSMA has vast experience in supporting the development of digital information services. And a key building block in such services is the information itself. It's the content. In this case, the digital and financial literacy content. And in our activities, we wanted to define what really constitutes good quality content. And we came up with a number of different dimensions or principles in our analysis. So we see actionability to be really important, the quality dimension of that content. So do users have the resources to act on the advice? Is information enough for users to act on? So actionability. Clarity is a second one, which is about presenting the content in a clear manner, and is information offered to the users easy to comprehend and reflect in reality. Timeliness is another one. So does content release follow the needs of the user across the year, or is content relevant to the activities of the user at that particular point in time? Usefulness is another one. So do users think they're getting content that is new to them? Is content useful to the user? And then we have the geographic relevance as well. And that's a huge chapter on its own right. To understand what really defines locally relevant content, we have been engaging our program partners and users. And one of the key insights that came up in those discussions is that content needs to be delivered in the local language. And that's relatively straightforward if we are talking about the UK. However, when we're engaging in countries like the Democratic Republic of the Congo, we have one official language French. We have 4 national languages, and then we have about 240 or even more local languages and dialects. So it's impossible to translate the content into all these languages. However, it is important to take into consideration the needs and the language skills of users. So targeting underserved population segments like farmers in the DRC with digital financial literacy content, it is likely that some of them do not speak French. Some of them may prefer a language which is not even one of the 4 national languages. So understanding those nuances is very critical in the localization of the content. And even if some of these prospective users do speak the official language, they may prefer to listen to the content in some other language. So localization and translation into the local language or local languages go hand in hand. However, localization is not only about translation. It involves tailoring the content to align with cultural nuances, with idiomatic expressions, with locally relevant examples. And I can give you an example here of what I mean with that. Let's assume you want to roll out digital financial literacy contents in Ghana and offer advice to local merchants about ways to access credit. Now, to improve the learner engagement, you'd want to refer to providers of credits who are active locally. So the Safaricom brand, for example, is not known in Ghana. However, for example, MTN brand is known to them.
Yep.
So it's important to offer examples which are relevant to the local population. They can be recognized and people can relate to them. And if DFL content is delivered on an app and includes imagery, you'd want to also use colors or images or symbols that are locally relevant and accepted by the local population. If you're targeting nano merchants, you need to think who qualifies as nano merchant in that country. For example, in Kenya, a nano merchant could be a street seller, someone who operates an M-Pesa shop or runs a barber shop. However, a nano merchant in some other country in Africa or Asia or the UK is possibly a very different individual. So all of this plays a role in the localization of the content.
Definitely, and I think the language point as well is super critical. But how do you go about this? So let's take the example of DRC, for example. You said French as a first language. There's 4 national languages and over 250 dialects, and also other local languages. So do you work with local creatives in terms of translation firms, audio studios to bring that type of content, or how do you work as the GSMA?
We normally work with organizations which are based in the country. Mm-hmm. We try to partner with people, with teams, with organizations that understand the local population. They have the expertise to translate content into the local languages. Also, another thing to consider is that in some of these languages, some of the more technical terms do not exist there. So it's important to be able to know exactly what a person speaking language X actually uses for that term in English, and be able to translate that so that the financial education content you come up with can be easily understood by the user.
Once we have that localization piece there, it's then about how do you package this content in a way that is engaging, is exciting for users to consume. So off air we were talking about the importance of gamification and dramatization of content. So how do you apply this into your content development process when looking at new DFL curriculums and content?
That's a great question. So based on evidence, content adoption is improved when content is stylized, and when it's stylized in a particular format. And gamification, dramatization are ways to stylize content. And that's where edutainment can play a role. So when I joined the GSMA about 10 years ago, I led a work stream looking after delivery of agronomic advice to farmers in a number of sub-Saharan African and South Asian countries. And back then, we worked with a bunch of mobile operators in those regions who had developed mass market information services targeting farmers. And these services pushed agronomic advice to farmers. And through user experience research, we realized that farmers would engage more with dramatized content than with plain scientific content delivered to them. Yeah. And in their communities, they started talking about the characters, and the stories became powerful agents of change in those communities. We extract lots of learnings from the way content was delivered to those populations. And more recently, I came across something similar in Kenya, a Kenyan edutainment television drama. It's called Makutano Junction. And in the 12th season of that drama, a bank branch manager in the show launched a women's savings campaign. And the story integrated mass media with local promotion through Kenyan banks, and with several episodes emphasizing the importance of saving, mobile management, the use of mobile money, of ATMs. The result was that 138,000 low-income female viewers opened accounts with various banks. And that is massively important because it shows how different delivery styles can improve adoption of DFL content.
Definitely. And for those that are listening and might have not used the term or heard the term edutainment before, what exactly is that?
It's a great term that combines education and entertainment, and that varies a lot between countries and regions. So what works in one region, for example, dramatization, does not necessarily work in a different region or in a different country. We, in the past, actually piloted different edutainment options. So dramatization is one, gamification is another, where you're basically converting that content into a game and you're asking users to, walk through that game and offer their answers and reach the next level and be able to advance in their education journey. So it's a great way to make the content more engaging, and that is what we're trying to do with our partners.
So Panos, then it comes to the delivery of content. So we've spoken about localization, we've spoken about how to dramatize and gamify content. So in the delivery, reaching to communities that maybe have not received content on DFL before and generally have lower smartphone access and internet access. First of all, what kind of channels are you using and deploying to reach those users? And how do you incentivize those individuals to consume and act on that content?
Delivering content on an app obviously offers a rich experience to the user because it allows the organization offering that digital and financial literacy content, for example, our mobile money partners, to enhance the experience through imagery, through audio, and offer something which is a bit more enticing and improve the stickiness. However, that's not the only channel we're looking at. So one of the key questions that we need to ask is how many of your users are actually using a smartphone? And from those using a smartphone, how many of those users have access to a data plan? So if I have a smartphone and I do also have access to a data plan, I can access that content. However, many users in the countries we're engaging in Kenya or in the DRC, in Ghana and elsewhere, they don't have access to a smartphone. They have only a feature phone. Or if they do have access to a smartphone, they don't have a data plan. So that is when you start looking at your financial education strategy as an organization and what channels you want to target so that you can capture and target the majority of your users. We have been talking to our program partners and users to understand what really incentivizes a user to consume that content. And one of the key things that came up was about using certificates of completion. So a certificate of course completion validates an individual's efforts after successfully finishing a course, and it is a tangible evidence of the dedication, of the skills, of the knowledge acquired during that course. For example, in the case of a nano merchant completing a course on entrepreneurship, the certificate of completion can be a document, usually in digital format, that the user has acquired knowledge on the topic of entrepreneurship. And certificates of completion sometimes come with additional benefits and make them even more desirable for users. And in our programming, we have been talking to our partners to identify ways to roll out certificates of completion to those consuming DFL content. And we have also been brainstorming of ways to deliver practical benefits to users that achieve that certificate of completion. And one of the ways to do that is by improving the credit score of users. And that's a huge issue in many of these countries. Yep. It's very, very important. More so when one wants to apply for a loan. Let's say I'm a farmer in rural Kenya, and I cultivate coffee in the highlands of Kenya, and I sell that coffee locally to an agribusiness. And for some years now, I've been noticing a decline of my yields, and I spoke to the agri-extension officer, and they advised that gradual replacement of the coffee trees is important because the ones I have are aging, so the yield has been going down, and they're less and less productive every year. So I approached the DFS provider to apply for a loan. However, they don't know much about me. I am lacking a financial
identity.
Yeah. Exactly. So they don't know much about me, about my incomings, about my outgoings. They don't know much about my cash flows across the year. They assume they're regular. They assume that I am a high-risk individual when it comes to repaying that loan. So the DFS provider may classify me, the farmer, the coffee farmer in Kenya, as high risk and assign a poor credit score. Yet, if that farmer managed to complete financial education training on accessing credits and maybe even entrepreneurship or borrowing and saving, they could see an improvement of their credit score. And that would allow me to go to a bank or a microfinancing institution, apply for a loan and get it. And that would be life-changing for me because I could go back to my farm and replace my aging coffee trees and over time see an improvement of my yield. The digital format is probably the best because when that's in paper format, it can be easily damaged or lost. However, what we'll need to think about here is formulating, supporting, brokering multi-stakeholder partnerships. For example, partnerships between organizations improving the financial education of users, mobile money providers, and also maybe even banks or providers of other DFS to allow a seamless sharing of certificates of completion so that on the user side, that happens without really any need for them to act apart from authorizing sharing of their data with an organization that can offer them access to the loan they have been trying to get for a long time now.
Let's talk about other incentives for delivering content. What else has GSMA and partners tried?
Of course. So let's assume that a mobile money user is keen to access DFL content on their phone. Their friend accesses that content, or maybe a family member, and they have really, really positive feedback from them. Or maybe a mobile money agent recommended that content to them. So if I am that mobile money user, the first question that comes to mind is, can I access that content on my phone? And if I have a smartphone and that content is available on an app, do I have the data plan to access that content? Our partners recognize that some users may not have access to a data plan and they're keen to zero rate traffic on the app. So this way users can access the content without necessarily requiring a data plan. And in discussions with mobile money providers and others, we also covered the possibility of pre-uploading DFL content on new mobile phone devices. And this allows mobile money users to actually access the content without, again, having the data plan or in areas where the connectivity is poor. And that is particularly relevant for population segments like farmers who live in areas far away from good connectivity sometimes. So having access to that content pre-uploaded on their handsets is critical.
Absolutely. And then, I think in my career, I've done a lot of work around digital content in this space, and one element that I've always seen is it matters where the message comes from in terms of the channel that the user is accessing to use that content. So whether this is through a digital platform or through an individual or through an organization. So how do you work to deploy content through trusted channels?
That's a great question. And that also brings me back to the topic of combining online and offline delivery of financial education content. And this is particularly relevant, the trusted channels for female mobile money users who an organization, a mobile money provider, may be targeting with the digital and financial literacy content. Now, the GSMA has conducted extensive research to assess what makes a female mobile money user more confident to use a new digital service. And in some of our projects, we saw that starting with offline delivery and then moving to online delivery can improve content adoption and stickiness. And in offline delivery, people from the circle of trust could play a critical role in creating awareness, in addressing concerns, in answering questions, in introducing the service to a new user. And in that circle of trust, it can be a family member or maybe a relative or maybe a neighbor. And of course, it's important to also introduce the content, the different styles of the content, and create the first level of awareness to enhance the way and the adoption of the content by users. And once the trust towards the service and the content have been established, moving to a hybrid model that also includes online delivery can allow adoption of the content and progress through the course materials. And that is when you're trying to leverage those circles of trust of the individual and allow for that content to be adopted faster and achieve scale much quicker.
Absolutely. So for a mobile network operator, why is it in their interest to promote digital financial literacy amongst both their customers and the wider population?
There's a number of motivations that mobile money providers or other DFS providers consider in the development of financial education programs. Increasing market penetration is one of the ways, and they want to ensure that they reach more customers and that also those customers have better learning outcomes from those initiatives. So learners grasp concepts faster when content is relevant to them and also use the DFS services of the mobile money providers more. And another one is about creating the competitive advantage. So offering superior content to the users can differentiate themselves from other competitors in that market. Brand reputation is very important. So demonstrating cultural sensitivity and delivering content that enhances trust and credibility among users. And then also looking at the cost-effective long-term strategy on how to improve the financial education of users and allow them to use more services, to expand to new, more complex use cases. For example, from transacting digitally to accessing loans, saving, or using digital accounts in your...
Panos, it's been great to have you on the Financial Inclusion Unlocked show, and see you soon.
It's been a privilege. Thank you so much.
This was Series 1, Episode 7 of the Financial Inclusion Unlocked podcast. Why not? Come and join us for a conversation. Head over to our LinkedIn page now and share your thoughts on DFL. You can also stay updated with GSMA's work on the topic on their website. The link is in the show notes. And also visit www.practicalmoneyskills.com and practicalbusinessskills.com to access a comprehensive library of content that Janelle and her team are working on at Visa. Shout out to SCBF for sponsoring Series 1 of the program, and also check out our other episodes. See you all soon.